Certainly. Here's a short introductory text for the subsection Introduction. What is decentralized finance? DeFi. Welcome to our journey into the revolutionary world of decentralized finance, or DeFi. At its core, DeFi represents an innovative financial system that operates independently of traditional, centralized institutions like banks, governments, and corporations. Instead, it leverages cutting-edge blockchain technology to create an open, accessible, and highly transparent financial ecosystem. DeFi is built upon the foundation of smart contracts on blockchain networks, with Ethereum being the most prominent example. These smart contracts automate and execute financial transactions and agreements directly between parties without the need for intermediaries. This process is not only efficient, but also ensures an unprecedented level of security and trust, as the transactions are immutable and publicly verifiable. The essence of DeFi is to democratize finance, making it accessible to anyone with an internet connection. It aims to create an inclusive financial system where services like borrowing, lending, trading, and earning interest on assets can be accessed by anyone in the world without discrimination or barriers to entry. In this section, we explore the foundational principles behind decentralized finance, how it stands in stark contrast to traditional finance, and the key components that make up the DeFi ecosystem. Join us as we unravel the transformative potential of DeFi and how it's poised to redefine the financial landscape. This introduction sets the stage for a deeper dive into DeFi, making it clear to the viewers what DeFi is and the promise it holds for the future of finance. The principles of decentralized finance, DeFi, are the fundamental ideals and mechanisms that guide its operation, setting it apart from traditional financial systems. At its heart, DeFi is guided by principles of openness, inclusivity, permissionlessness, and transparency. Openness. DeFi is built on open-source technologies, meaning that anyone can view, audit, or contribute to the code underlying its applications. This open nature fosters innovation and collective improvement, allowing DeFi platforms to evolve swiftly in response to user needs and security challenges. Inclusivity and permissionlessness. DeFi removes barriers to financial services, making them accessible to anyone with an internet connection, regardless of location, identity, or socioeconomic status. Unlike traditional finance, where access might be limited by geography or financial status, DeFi operates on a permissionless basis, meaning that there are no gatekeepers. Anyone can participate in DeFi markets, create new products, or access financial services without needing approval from a central authority. Transparency. The use of blockchain technology ensures that all transactions within the DeFi ecosystem are recorded on a public ledger, accessible to anyone. This level of transparency builds trust among users, as they can independently verify transactions, check the functionality of smart contracts, and audit the entire system as needed. It also plays a crucial role in risk management and decision-making, as participants have complete visibility into the health and performance of DeFi protocols. Interoperability. A key principle of DeFi is the ability for different protocols and platforms to work together seamlessly. Thanks to the standardized smart contract interfaces, especially on platforms like Ethereum, DeFi projects can easily integrate with each other. This interoperability enables a rich ecosystem of interlinked services, maximizing efficiency and user experience by allowing for complex operations that span across multiple platforms. In DeFi, users have full control over their assets without needing to trust a third party to manage them. Thanks to cryptographic wallets and smart contracts, individuals can execute transactions, earn interest, or borrow and lend directly, maintaining complete control over their funds. Understanding these principles is crucial for anyone looking to navigate the DeFi space, as they not only define how DeFi operates, but also underscore the philosophical shift it represents in the broader financial landscape. These guiding tenets aim to create a more accessible, efficient, and equitable financial system, challenging the centralized approaches of traditional finance. How DeFi differs from traditional finance. Decentralized finance, DeFi, and traditional finance, TradFi, operate on fundamentally different frameworks, reflecting a paradigm shift in how financial transactions are conducted, services are accessed, and systems are controlled. The distinctions between DeFi and traditional finance can be broken down into key areas, highlighting the transformative nature of DeFi. Intermediary-free operations. Traditional finance is characterized by its reliance on intermediaries such as banks, clearinghouses, and financial institutions to facilitate transactions and offer services. DeFi, on the other hand, employs smart contracts on blockchain technology to execute transactions directly between parties without any intermediaries. This removal of intermediaries enhances efficiency, reduces costs, and speeds up transactions. Accessibility and inclusivity. Traditional financial systems often have barriers to entry, including credit checks, geographical restrictions, and minimum balance requirements, which can exclude a significant portion of the global population. DeFi is built on principles of inclusivity and permissionlessness, allowing anyone with an internet connection to access financial services regardless of their socioeconomic background or location. Transparency and immutability. While traditional finance operates within a relatively opaque system where transaction details and the inner workings of financial products can be obscure, DeFi offers a high degree of transparency. All transactions on a blockchain are public, verifiable, and immutable. This not only fosters trust among users, but also allows for a more secure and fraud-resistant system. Innovation and flexibility. The open-source nature of DeFi encourages ongoing innovation and adaptation, with developers continuously improving existing protocols and creating new financial products. In contrast, innovation within traditional finance is often slower, hindered by regulations and the slower pace of technological adoption. Custody and control. In traditional finance, individuals entrust their assets to institutions, which act as custodians and have ultimate control over those assets. DeFi empowers users with self-custody through the use of digital wallets, enabling them to retain full control over their funds and interact with financial services directly. Regulation. Traditional financial systems are heavily regulated, with institutions required to comply with complex legislative frameworks designed to protect consumers and ensure market stability. DeFi currently operates in a more regulatory gray area, with the evolving landscape presenting both opportunities and challenges in terms of compliance and consumer protection. By addressing the limitations of traditional finance, DeFi paves the way for a more accessible, efficient, and equitable global financial system. Understanding these differences is crucial for recognizing the transformative potential DeFi holds for the future of finance. The key components of DeFi. At the heart of decentralized finance DeFi are several foundational components that enable its operations, distinguish it from traditional finance, and facilitate its wide array of services. Understanding these components is essential for grasping how DeFi functions and appreciates its depth and potential for innovation. Here are some of the key components that make up the DeFi ecosystem. Blockchain technology, the backbone of DeFi. Blockchain technology offers a decentralized and immutable ledger for recording transactions. This foundational layer ensures security, transparency, and trust in financial operations without the need for centralized control. Smart contracts. These are self-executing contracts with the terms of the agreement directly written into lines of code. Smart contracts automate and enforce the execution of contract terms, enabling trustless transactions and the creation of complex financial instruments without intermediaries. Cryptocurrencies and stablecoins. Digital assets play a crucial role in the DeFi ecosystem, serving as the primary medium of exchange, investment, and value storage. While cryptocurrencies offer diversity and growth potential, stablecoins provide price stability, making them suitable for everyday transactions and a hedge against volatility. Decentralized applications, dApps. These applications run on a blockchain network, offering various financial services such as lending, borrowing, trading, and asset management without central authority. dApps are the interface through which users interact with DeFi protocols, accessing a world of financial services directly from their digital devices. Decentralized exchanges, DEXs. Unlike traditional centralized exchanges, DEXs allow users to trade digital assets directly with one another without an intermediary, providing more privacy, security, and autonomy over one's funds. Lending platforms. DeFi has revolutionized borrowing and lending by allowing users to lend out their cryptocurrencies or take loans autonomously through smart contracts, often providing attractive interest rates compared to traditional banking. Yield farming and liquidity pools. Yield farming involves users providing liquidity to DeFi protocols in return for interest or tokens. Liquidity pools are collections of funds locked in a smart contract that facilitate trading by providing liquidity, crucial for the functioning of DEXs and other DeFi platforms. Oracles. These are tools that provide real-world data to smart contracts and dApps on the blockchain, enabling them to execute based on events that occur outside the blockchain network. Oracles are essential for applications that need accurate and timely data from the outside world, such as price feeds for trading or weather data for insurance contracts. Together, these components form the robust and versatile DeFi ecosystem, offering an alternative to traditional finance by making financial services more accessible, efficient, and transparent. As DeFi continues to evolve, these components will play a pivotal role in shaping the future of finance, fostering innovation and expanding services to meet the needs of a global audience. Governance tokens. Many DeFi projects issue governance tokens, which grant holders voting rights on key protocol decisions, such as updates or fee structures. This promotes a democratic and decentralized model of governance, aligning the interests of users and developers.